So we're going to start another hedging sim session on our EuroCAD this time. I hope everyone's having a good new year. I haven't posted one of these for a sec, but there's been a lot of people who are coming on board our academy because they're seeing these videos and they want to learn how to hedge for income and just really control their portfolio a bit more. I think that's why people prefer this approach to stop losses because you can add, reduce, it's not set in stone once price goes either way. There's always something you can do about it, essentially. In every single video, obviously, I'm always ending in net gains. So I've started on 100K and I've done that because someone asked for it. So you would be trading one asset essentially instead of 10, let's say. So I'll put my max size at about one standard, and I'll play this along, and I'll see where we get. I've just fast forwarded a bit so we could get some price data out. Now for this particularly, I can see a key price action level here for a short. I don't know how high the market's gone apart from that high of 169. I don't know how low it's gone apart from that low of 1348. So it gives me a good spectrum of price over time. I wouldn't be shocked if you hit this level I've just labeled because of the force at which you're coming in, or stop thereabouts, which you can sort of see coming. I need some entry confirmation for a short, really. Otherwise, I'm just going to hold off. So if that gets a bit heavier in 1 4-hour swing, okay. So now I'm going to take one lot short. As I said, I'm not going to have a stop loss because I'm hedging. My target, I can see there's very early support about here. So I might be forced really to take profit there. So that's where I'm going to put my TP. And I'll play it a bit more because it doesn't really matter. There we go. So that's trade one, and we're out. That was a full standard because of the value of the market. Now you can see the market's dropped only slightly. So instead of trading another full standard, I'm going to really want to set this down, and I'll take about a quarter of that original size. And on any bounce, if we get one, I can look to exit. Now, if we don't get one, it's not really a big issue at all because I'll kill that as well, just for some minor gains. Because I can obviously add later, hence the sizing. So I can see a little bit of rejection now, and I'm going to get short. Any pushback to that recent low, and I'll exit for gains. Anything higher, and I'll just re-add again. Okay, so there we are. Half size is now in play. 3/4 is now in play. And I'm waiting really for a full. So I can kill this one. And I could probably just about lightly hedge the former two. So if I'm 0.15, I'm just under a third of the total exposure. Okay, I would have liked that. I can see a little bit of resurgence. I'm playing it a bit too fast at this point, I think, to be honest, because I could have killed that as well and hedged again. I will actually add another 1.5. And at this point, I'm going to kill that one. Now, there is that. Let me just get rid of the previous orders. There is that. I should get rid of those as well. It's weird. There is that short here, which is at this early sustained support. It looks like this support is being sustained. So what I'm going to do is I'm going to exit that, just take it out the gains. And I'm going to play. And if the market starts to tip a bit, then I can change my bias. I'm just going to kill that one. I'm going to become short-minded again. Now, I know I said it was sustained, but we're now slightly higher up. Because the market's struggling a bit, I'm going to go for 0.35. I'm just going to kill that off for gains. Because, like I said, the market is struggling to fall. I'm going to rebuy again at 0.2. Because you're being sustained, I'm going to exit that for gains. I'm going to add again. So it becomes quite cyclical, really, after a while. But, you know, that's why it's a bit more manageable than stop losses, because I've really got the choice to do what I want, more or less. Okay, kill that one. Great. And I'm keeping the longs light as well now, because I know that any real smackdown in sentiment, kill that one, is going to cause a massive tumble. Okay, you can see on the monthly, you've already surged 134 to 153. Okay, it's almost 200 pips straight up. We know from our early drop that that has been a sustained target. So that means, anything short we can kill again at that point. But it also means that anything short, well, we know the market is being sustained. We know the long side bias is there. So, there's a good chance you'll just break the high again. So that's why I'm taking a light short. So essentially, you've got maximum risk in either directions, really. You could be wrong massively short. Wrong quite a bit short, I would say. And you could be wrong long massively. So bunch of shorts out there. Okay, and of course now, again, I'm going to look long. You can see a clear uptrend now over time. So anything back to the highs, and I'm going to complete that long cycle. Now, you can just see it pushing back into this level a bit. And I wouldn't be shocked ultimately if you do end up breaking it and coming much further down. Hence why I'm very careful on my longs. Okay, and I'm adding them here and there. All right, I'm not too keen on what this is doing. I'm probably going to have to, no, I'll tell you what, I will leave it just because of this sort of spectrum of uptrend price. I can kill that one. So we're now 2.3%, 2,400 almost, 2.4%. And we started about the beginning of 2008, I believe. So we've been going for a minute, but this is one asset, remember, so obviously the opportunities are limited, whereas if you traded a diverse portfolio, you'd be able to take various entries. So I'm just going to add a third again, or thereabouts. Any real push back to the downside within this trend, and I'm out like that, $250. Play it a little bit. I'll just add a light long in case you pop back to the highs. Like that. Okay. Of course, I could be trading in a bit more of a risk-on manner if you like, but I'm just keeping it risk-averse and simple. That's how I like to do things. There's no point in going crazy on risk if you don't need to. Go for a 0.4 roughly on 2 entries. So here's where you probably break the high because of the force. Now, because you've got a new high, I'm going to add a bit more. So at this point, I've got 0.7 in play now. And I'll probably choose to exit that last short I just took if I get a reasonable opportunity to do so on a downside move. And I'll probably start to hedge the other ones that I've already got wrong. So let's have a look. All right, so I can pull off that. Now, bear in mind the price has only come off the top, sort of that much. All right, really not an awfully long way. By any means, 150 pips or so. So for that reason, I can keep the hedge very light, and I'm just trying to get in the way of that 0.4. Okay, so very small gains there, probably 1/13 of the required amount, but none, it doesn't really matter. As I say on all of these videos, those hedge gains will add up quickly. And the reason why this works so well is because markets do actually spend a lot of time moving sideways, particularly Forex markets that have a, not an exact, but a reasonably close correlation with other Forex pairs in terms of their central bank direction and the viciousness of their monetary policy cycle. So if you look at that, that's $63, for example. The total loss here is $360. So it's already 1/6 of that exposure wiped out. Now, obviously, if I take another light short like that, and I could have killed that for gains, but obviously I've missed it. Now that's 1/3 almost of the total risk. If I get long again, now that's, almost half the total risk. So you can see that this sideways movement really is the answer, the saving grace, if you like, within hedging. You just need to understand price action rules, money management rules, sentiment rules, and everything in between if you want to get this right really well, which is what our most dedicated VIP members do, who are making a serious income now from trading. So because we're reasonably high again, I'm just going to add another 0.3, and at this point I can probably speed it on. Okay, great. So we'll kill that. $384 there. What I will do actually is just remove that one. So that's the first loss, I think. Only one, but there you are. And I'll just add a light hedge in case we get a pop, which we do, but it's not very far. And I don't think it's going to cause follow through if we get a bigger push up. Okay, so I'm going to kill that because you can see the price is waning. I'm going to add another 0.2 for a 0.6 exposure, and I would have had that out. It looks weak, looks like you may fall. I'll just kill that for $72. Again, that's like 1/6 of the total drawdown at the moment. I could start to long this, I guess. I mean, we're talking really minuscule, $36 there. Tell you what, I'll take another 0.15. I'm really sort of scraping it. Okay, so we fell further. I'm going to take a 0.25. That makes 0.4, which is okay considering we've gone off the top now almost 300 pips. So half max. Nice gain there. I will remove this because it looks like we're now fine. We've got a newfound downtrend. We're a little bit close to where I last shorted, so I'll take 0.1. You can see the gains generation here is extreme. And typically it is when you get this price action. Okay, so still, I would have had that, definitely. That's the problem with simulators, I would say. And by the way, if anyone's wondering, this is FX Tester 6. Very decent. It does the job as it should. And it basically allows you to play through markets. And that's really handy because a lot of people don't do that. We always advise being profitable on the simulator and or demo before you do anything. What is the point in starting if you can't make any money trading anyway? If you haven't got the required skills and know-how and capital and everything along those lines. Okay, just no point. So I can now kill these out. Technically that is a loss, but it's hardly even a visible one. I'm going to stick 0.25 in there. At this point, the accuracy rate I've got is pretty much extreme. It normally is very high, 85% plus closed gains overall, mostly, which is, fascinating for some, but you can see me doing it live. This is all real. I haven't memorized the 4-hour prints on any chart. So at this point, it's worth saying I could end the cycle. I could now kill off this, and I'm out for net gains completely. And I've traded both sides. I haven't held on to entries for too long. And therefore, I end up completely in gains. I've got the choice now just to add again, let's say, and begin the short side cycle again. So now I've finished the previous cycle. I can just add and see where we end up. Again, gains. I think the problem for most people is they don't understand where and why targets sit, where and why to exit. But it is just a means, basically, if you've done it enough, you get good at it. And then every single trade you start to take, as you can see on the screen, like I said, I've not memorized the order of these candles. Price action and everything in between just becomes easy to read. and it should be. As well as that, you need to understand clear market formations. Now, you can see the market is forming something because we're pretty much slowly dropping. You can see that here. So if you look at the range, and again, in our accelerator program, we do this a lot. If you look at the range, I've identified clearly the levels that sit. Now, markets move from higher to lower time frames. Okay, the ranges persist on the higher time frames, and as you go through, you can see that, and it's all the same thing overall. But the long-term market rules. So I know the closer we get to this, I'm going to be long. The closer we get to that, I'm going to be short. And all the price action moves in between. If I want a high hit rate, I'm going to have to trade in that fashion. So if this pushes down towards the range, I'm certainly going to want to start to get out because it's likely those long-term traders or the market algorithms in general are going to cause the long side bias to start to come in. And the reason why the long side bias is sort of here anyway is because the market is slowly dropping. You know, you can see that this isn't ramping down, and you know, based on how that price has just fallen under the low, I can now just look long, lightly, and I'm now looking for a push back towards the top end of that range, okay? Like this. So I need it a bit higher, really. But because I can see a bit of weakness, I'll start to close it out. Okay, now if I wanted to short that again, I absolutely could because the distance really towards where you would probably get any kickback to the to continue back up is about this support. Now you have to remember that at any, so there you go, that's the move. Now I could even buy that again. You have to remember at any time, you really should be, if this was real, markets playing on the day, you should really be looking at where market sentiment sits because market sentiment is what's going to cause all of this to happen. And knowing how that accumulates over time is absolutely key. So I can add again, now we dropped sort of just under the range. I know there's still support here, you can see that. So that means for me, any real pop to the upside is going to bring us to very early resistance, if we get it. But this gives us a good demonstration of, how hedging plays out now, because I've got the opportunity really to start to short. So if I take a 0.1, that's a quarter of my exposure there. So I know if we fall a bit, I can take that. Okay, now, like I said, I know that gain is not a lot for now compared to the overall accumulated loss. But you have to remember we've already stored a lot of gains on the cycle. And as well, if you took that, those same short side hedge gains continuously, you would end up, just getting rid of that loss overall. So if I hedge that for 50%, that means on any real drop, I can get $87. Yes, the overall loss is $650 now, but if you add the 25 and 87 I just got, again, I'm 1/6 of the way to cleaning out what I've got wrong, rather than closing it out now for $650 loss. Now, I don't even need to hedge immediately, okay, and I've got the ability now to take further longs. There's a bit of support just below, you can see that. So I'm going to add again. And remember as well, if this pops, okay, to the upside, which it looks like it probably won't, or it might, no, it didn't. Yes, the drawdown does grow, but again, I haven't closed out any loss. Now, the next level of key support really sits down here. So I'm going to expect that there's a good likelihood I'll end up there, and therefore this drawdown is going to grow. So I might decide, okay, well, I'm not going to add any more, and I'm only going to hedge. Or I can decide, okay, well, I'm going to add now. All right, and that would be a DCA entry. Now, because I'm spacing out my entries so well, I've got the advantage because if I do take a long now and it pops, then I can easily just close that out and take probably some of the loss I've already experienced off and out the game. So I need to keep an eye on the drawdown and where it sits. I'm still looking for a long, and I'm not getting that many hedge opportunities but on a bigger push to the upside, I will. So the distance now is almost 1,000 pips. The drawdown still is nothing, effectively, because we're in positive equity. So this is now going to give us a good example of how to basically net this in a positive cycle overall. Because what we're seeing at the moment, okay, and I'll take 60% of the maximum size. What we're seeing at the moment now is pretty much the opposite end of the cycle. So to begin with, there was lots of sideways movement, nice and easy, in-out gains. And now what we've got is the opposite, a big drop, and we're looking for that long. Now, my target can come at this early resistance, if we get there now. If we don't, it's not horrendous. But once I've killed that, I'll probably look to hedge. I'm not too keen on adding just at the moment. Okay, so what I'm going to do now is, because the drawdown is slightly lower, actually, slightly higher, and I'll kill it. Or any signs of rejection, I'll just kill it now. Okay, now I'm going to add lightly because we're not very far up. Any pullback, I'll kill it again for short gains if we get them. Looks like we might not. Oh, no, we have. So another $100. So that's $600 of the $3,600 now claimed back. So 1/6. I can re-add again for a DCA long. Market looks slightly subdued till now. Now, if it continues to, so that's decent. Close that. I now want short side entries. Become a decent way off the low, to be fair, for 400 pips. So I can keep my short. Any push back to the lows, I'll kill that. So now what's happening is we're accumulating some hedge gains and also some DCA long gains. Now, I'm not going to add again. Well, actually, I think until we get sort of where that line is, because that is the newfound range, if you like. Okay, so a bit of entry conf there. I won't add as much. But anyway, that's great. $300. So you can see what's happening now is we're really just pushing into that accumulated loss. And ultimately, I can close one of them out. So this push is slightly bigger. I'm going to take a slightly less sized short than before. And now I want to see where we go. I would say if we're going to rally, we might get back to those highs. So I'll kill that for $70. Great. Still got this one in play. Okay, it looks like it might just come back a bit to that level below. Possibly. No. So $40. So we're accumulating a lot of gains here. I don't want that long unless you can get a bit lower again. I'll tell you what. No, I won't. I'll leave it. So it's still in positive equity quite a lot. These hedge gains and DCA gains are adding in to boost that balance, which obviously is going to offset our formerly building loss. Okay, so there we are. Decent. I think I missed a bit of it, but I will close that. And again, I'll take a hedge. Okay, so now we're coming back up a bit. Now, if we push any higher, I shouldn't play it so fast. If we push well beyond this range to the upside, what I'm going to do is I'm going to reduce. So I'm going to basically take a loss. Because that means if we don't come back to the highs, I'm not going to be in any drastic trouble by any means. So again, there's a bit more. But this also, remember what I said about sideways movements and how they save the day. It's absolutely true. It's absolutely true. This sideways constant movement is accumulating us tons of gains because we can get long, we can get short. Even if we were just short, it would be the same. Okay, so price coming to that range again. And I've got the choice. If I wanted to slow this cycle down or end it, I could just stop buying simply. Okay, any real push up with a bit of momentum, okay, I'm going to kill this. $72 again. And I'm still left with all of this. Now, if I look where I took that top entry, that's 152. We're still a long way off that. If we can push back to the highs, I'm going to hedge again. You know, and I can take a more expensive reduction if I wanted. I could close that 1,250. Because we haven't had a real retracement, I might consider not doing that and just keep hedging. I mean, if we get really back where we were, about 146, 145, I mean, I could do it now. Okay, so I closed that. I took the loss. I'm still $5,450 up. I could close everything and I'd still be in profit. Okay, so if I wanted to, so basically, if you want to end the cycle, to say, you know, you want to finish trading this asset, then you basically want to look for the best time to shut everything off. Mostly that's going to be when you've collected a decent amount of gains, and you've then got a retracement in price that gives you, you know, a good enough pullback. So you can see again that short hedge, $230. If the overall drawdown, you know, if I delete that as 1830, it's not going to take me an awfully long time to get that back. And mostly because I'm buying as well, I've already done that. Okay, so now we're getting a bit more of a push to the downside. I can decide, okay, well, do I want to add again? And obviously this is all sustainable because I'm adding hedges throughout. So if I take that entry there, I could have killed it. I should have killed it. I didn't kill it. It doesn't matter really. We're now, so this will be a really interesting test because we've got these longs. The drawdown is now climbing, 5261. I can decide whether I want to add again. We're still in positive equity, so I don't really need to get too fussy. But I would say I certainly want to look at taking light hedges on the way down at early resistance. I just need to be careful how fast I fast forward it, to be honest. So yeah, we really want to have decent pullbacks if we're gonna get anything serious. So at this point, now what's happening is we're getting closer to maximum drawdown. So we're now in negative equity for the time being. Because of that, I'm going to take off that one and I'm going to protect and I'm going to let it play a bit. Now we've had a big push up. I'm almost certainly going to want to take at least a quart size hedge. And anything higher, again, I'm going to take another one. And I'm going to take this opportunity as well to close that. So now we're trading a very wide cycle of price, which is okay because inevitably I'll exit it all. We're still, well, borderline positive. So I've got over this swing 0.75 in play. I think what I'll do is, given that price action level, I'll add again. So I'm now hedging those longs, and effectively those longs formerly, which I could have killed and probably should have. It's too fast. I wonder if I can. No, might be the case that we just fall back and don't get them again, which is going to ruin things a bit, but it's not a massive deal, to be honest, because I can hedge anything. I tell you what, we'll take a tiny loss there. And now we've almost got rid of the whole of the long side exposure. So what I can do now is I can effectively start working away and adding the same long lower, which is effectively what I've just done. And that means I can start accumulating long, I can start accumulating short. Okay, and I can just keep doing that until we get back on terms again. Okay, at this point, great, I can kill this long. And now basically the exposure, instead of being short, has swapped to the long side. So I'm now looking to long side hedge. I would have liked that one. And this is where the cycle then extends. Okay. So anything back up and I'll be out. And you'll notice at the end of this, you know, however high the drawdown goes, I'm always in net gains. Always. And it's just because the system works well and I'm trained to use it. But it's basically because of the hedging aspect. That's what gives you the edge over the markets. The fact that you can effectively control your loss by hedging throughout. So again, like I said, it varies in terms of profitability. It varies how many assets you're trading, how large the assets are being traded. I mean, we've only really gone into minor drawdown so far. Okay. Equity drawdown, that is. That was about 3% or 4% or something like that. So now, again, I've just removed a bit and I can see the upside coming through, to which we've got another shorting opportunity and I can kill this long. So basically, if this falls now, which it has, it gives me a big edge because now I can take a long like that and I'm really grinding down the loss, really grinding it, which is great. And I can be careful where I add the short going forward because it needs to be in line with those ranges, like I said. If I don't want to hedge long anymore, I can stop doing that as well. Okay, I might consider it because now the price is going really far to the upside and the drawdown, the equity drawdown now is 3.6%. So I definitely want to start hedging. And then overall, if I'm going to kill this cycle, I've got to do it reasonably well. So again, this is the time when you would look really closely at where you're going to hedge, how you're going to hedge, because the loss needs to be sustainable, hence the sizing. I can also decide, do I want to take something off? Most likely the nearest loss, I will do that because I don't want to end up in trouble. So now I just keep adding long hedges, take them off. Price fall, I don't want to add a short because I'm in too much danger if I do that. Put the hedge size up because the setup is decent and the price had come a decent way. Can now buy again, perhaps. And now you're getting a bit more of an equilibrium, if you like, in terms of where the price is and how it's moving, hence the drop in drawdown. I'm going to leave these long side entries for a sec. Okay, so I've got a decent move there over here. You can see in positive. That is this long. Okay. Or was that a former long? It must have been. But this one I want to kill. Okay, I'm out. And yeah, I must have left a long on, not closed it. I probably should have closed it a bit higher, but nonetheless, I don't think it matters. Still got some loss there and still a negative equity drawdown. But the drawdown really is minor overall in terms of where it sits on an equity scale. So I am going to add short. Hopefully, if you get a bigger fall, you will see a bit of a better accumulation of short side gains. Otherwise, I want to hedge long again, which I will do at this point. 0.25 will get that straight in. Any pushback to the high, and I'll kill off. Okay, so we're just now waiting. So I've got a bit of a push there, 265. Again, yes, I know the short side accumulation is there. But like I said, in terms of equity drawdown, we're still in net gains. And I'm still taking long side entries only. At this point, just to hedge continually. I can now take the opportunity to wipe that one. I'm not going to add a long till here, let's say, hedge long. And now you're really falling to key levels. Okay, I can decide what do I want to do. And I really want to start to pull this cycle inwards. Okay, I want to pull it closer, which means these shorts effectively need to go and go over time. But there is a gap, so we're going to have to tighten that gap somehow. Okay, the way to do that mostly is to, you're forced pretty much to take a loss somewhere. But obviously we've got hedge gains, etc. But you would basically have to wait till there's a good point in the value cycle and the drawdown cycle for you to basically add and reduce. So, for example, if I kill that one for gains, I can probably kill that one for gains, and I can let it ride. If it comes up, my short side losses grow, yes, but my long side losses don't. I could then add another short, and I could have killed it, both of them. And I would have liked to do that. Nonetheless, I've got that out. So now I've managed to, because I deleted that 0.2, I've effectively moved it higher. At this point, I'm still in gains overall. But now if I want to end the cycle, I would just add short like that. And then if I'm going to add long, I'm going to do it lightly. Okay, like this. Okay, so that basically what I'm going to do is, because my equity has become more sustainable, I'm going to add any light longs and basically work my way down to the shorts. And then ultimately just kill it all. Okay. So I'm still hedging, I'm still protecting, but I'm just careful in how I do it, because I'm favoring now, obviously, the short side and a longer term short side fall, because I've got the equity to do it. Obviously, if I didn't have the equity to do it, I wouldn't do that. It becomes harder when the price goes this far, but then when you get that ultimate pullback like that, you're closing out larger gains. And at this point, I can then add again. I'm now 12% up on balance. So we're now slogging it, and we're just waiting for a big fall, pretty much. If that doesn't happen, like I said, we've got the equity to sustain it, so it doesn't really matter. It's not the end of the world if it doesn't fall. If I was doing this at the beginning of the video and we didn't have the equity, then it absolutely would be a problem. But we know, of course, that's not the case. And essentially any larger fall now, if we're lucky enough to get it, is going to be the end of the cycle. If we don't get it, it doesn't matter. It's not the end of it, us. Okay, so out there, I don't mind still. The reason why I'm adding light hedges is because if the price does fall drastically and that light long gets killed, it's not a big deal. So I've got 9K in drawdown, 114 in gains. We're clearly well in net gains now, because I'm just accumulating more and more and more. I tell you what, I'll kill that and I'll kill that. So now you just need a thumper fall, pretty much, or at least something decent enough. So I'm going to hedge in case we don't get that, and I'll just need to keep grinding away, basically. Okay, $570. Again, if you look, $500, well, that's 1/16 of that total short loss anyway. I'd only have to do that 16 times, which could be easy in a cycle like this, where you're just going sideways. Like I said, if my 0.15 fails, I don't care, because it's going to make my life better on the short side. I could even add another one, to be honest. I am trying to wind this down, like I said. Don't want to restart the project. No, please don't. So price is struggling there. So looks like you might get a bit lower. Now it's gaining a bit of momentum. So you can see at any time, I'm always safe drawdown wise. And at this point, because I want to end the cycle, I'm just waiting really for a good price to do that. I mean, the price at the moment obviously is just too high for me. If you look on the longer term scale, we're down here. I want something, sort of here if we can get it. So we'll see where we end up. I mean, I could keep adding short, but like I said, I'm trying to give an example of ending the whole thing, because obviously, you want to do that at some point. That's the point of hedging. But nonetheless, I mean, I could be buying this routinely and then just killing it, $150 here, $250 there, $500 there. It adds up over time just to remove the whole loss. But like I said, anything lower, I mean, about there, let's say, and I'm sitting, I close everything, there you go, we're still up $9,868. So that's a complete cycle, clear net gains every single time. If you want to learn how to do this for real on Forex markets, come and join us live throughout the week. We'll help you, we'll show you how it's done, you'll get the full method. Go underneath, see you in the next one.